We are so back, and I'm excited to share this video with you guys with crypto and where it is right now in the market. So today, I'm going to share with you guys 3 ways crypto is taxed, and 2 of them I can guarantee you will disappoint you. Now, before I get into that, I just want to tell you a little bit about myself. So my name is Alan Pham, founder of AP and Associates, where we help our coaches, content creators, and small businesses go from taxpayer to tax saver by leveraging the tax code to the fullest extent. I've been in the finance space for over 4 years now and tax advising for over 12 months, licensed with the Main Street Business Certified Tax Advisor Program. I help clients know exactly where they are financially and have saved clients up to $130,000 in taxes in a given year. And I want you guys to know that every financial decision you have towards your business, which could be crypto, can affect the business and you in so many ways, not just the tax side. Tax sides are just, something that you already have to take care of, but there's also the legal aspect behind it. Please use your best judgment after watching today's video. And this is not financial advice. None of this is advice geared towards you guys for finances. I am a tax professional, but I am not your tax professional, or in some cases for some people, not your tax professional yet. Now, how long have I been in crypto, and what makes me be able to speak besides the fact that I already am advising on the tax side? But I just want to show you guys a screenshot that I just posted when I was making this doc. Is I bought crypto when it was first in December 2016, which is insane, and it's come a long way, right? We're 8 years into this, and I slowly was dollar cost averaging inside of it. It's not much, but it's compounded, and what it is today, I can not discuss any further. But I can also certify you that I am a degenerate, if you guys can see, right? Degenerate, that's like, if you guys don't know what that is, then you might not be at that level yet. But I've done some, pretty insane things and lost a lot of money. I can certify that with you guys. But so today, I want to talk about the crypto side and taxes, and essentially the 3 ways we can get taxed with crypto. But before I do that, the IRS knows about crypto, guys. There's money at this today age, like there's hundreds of millions of dollars, almost billions and trillions of dollars flowing into the crypto market. So the IRS, they're their own business. They want a piece of that. So they're gonna do their due diligence and go after them, and they are coming hard. Now, before I start it, I want to go into the 1040. And this is, 1040. You guys should know this, right? When you guys file your return 2023, you guys had to fill this out. Now, if you didn't have to fill this out, maybe you just gave your documents to TurboTax, your CPA, your tax professional, and they just filled it in for you. And, they're, getting, your refund to you or doing whatnot. But I want to show you guys something. Digital assets are so important. They're more important than your kids. And this is what the IRS is telling us, because look at this. It's literally on the very first page of a 1040 is digital assets, right? You got some of you guys got kids dependents. They put digital assets above some of your kids, which is insane. Now, the question that they ask is, anytime during 2020 did you receive as a reward award or payment property services or sell, exchange, or otherwise dispose of digital assets, right? And you're supposed to click yes or no. If you didn't do any of these things, no. If you did do something where you maybe sold some of your losses, you got to click yes. So just to make sure. And what happens if you guys don't want to fill this out, right? Let's see. Under penalties of perjury, let's zoom in a little bit, because I want you guys to take a look at something. Under penalties of perjury, I declare that I examine this return and accompanying schedules, and the best of my knowledge and belief, and their true declaration of proper based on the information to has any knowledge. So guys, if you guys lie, it's going to be some serious business. You guys are going to probably be right next to Sam Bankman-Fried, the FTX guy, in that situation where he's at right now. And let's not try to get into that situation. So next thing, the 3 ways that crypto is taxed. So if you buy crypto and then sell to USD, that's taxable. I think everybody should know that. You're going from Bitcoin and you're swapping it back to US dollar inside of Coinbase. That's a taxable event. That will be recorded. Okay. You'll get taxed on that. Obviously, if you bought it and then you held it, that's where the part of the taxes come in, right? If you bought it and you held it and it's going up, there's that, that difference, that capital gains, that's taxable. You sell it back to USD, that's capital, right? And this one's going to disappoint a lot of people right here. So if you buy crypto and then exchange for another crypto, that is taxable. When I first heard about this because this is information I get from talking to different tax lawyers and tax attorneys and other CPA professionals, and this is what hey, this is what the IRS is looking at. Now, what do we mean by when you buy crypto? So, like, if you buy crypto like Bitcoin and then you hold it for a little bit, or you immediately swap it for ETH, right? That's taxable because you are taking one form of currency to another form of currency, a whole different product, or in this case, well, in this case, it's a product that is going to be taxable also. I know, guys, that's actually insane. So if you go from ETH to Ripple, taxable, right? Now, also, if you buy crypto in exchange for services or products. So what do we mean by services or products? Services. Maybe you're actually utilizing your crypto to get tax services with me, right? Or you're utilizing your crypto to get your lawn cut, right? That's also taxable right there because we don't know when you bought the crypto. Hey, was the Bitcoin at $100? Well, let's say $50,000, and then when you swapped it for, or you exchanged it for a service like getting your lawn cut, it was at 60,000. Well, hey, guess what? That's taxable, right? Same thing with products. If you are buying crypto and swapping it for NFTs or actual products, that's taxable in itself right there. So that's something that we want to consider, the three ways in which crypto is taxed. Now, in the future, that's going to wrap up this video. I want to discuss more about capital gains because we talked about, when you're buying crypto and then you sell it immediately, but then when you buy another crypto and you're swapping for another crypto, how does that gain get taxed? It's called capital gains, and it's a little more complicated than what people think is just 37% or 20% because they're holding it longer. It actually works a little bit different, capital gains. So I want to discuss that with you guys a little more. Upcoming videos, I will discuss more in depth on how staking, mining, NFTs, collectibles, gaming, lending, metaverse, metaventures, all that stuff, how that will be taxed. Now, I will also share with you guys some tax-free vehicles, right? Who doesn't love to get all the gains from their crypto and do it potentially in vehicles that are tax-free, like your Roth, any retirement accounts? Those things, we'll talk about those. Putting all the gains in a trust, maybe a charitable remainder trust. Those are good things that you can put your money in and not have to pay tax on it immediately, right? Also, please leave a comment down below on anything else related to crypto and taxes, and I will work on getting that content out for you guys. Please drop it down below, and hopefully you guys learned something new on how crypto is taxed. Make sure you guys are tracking it, and we will see you guys in the next one. See you.